And the latest report card on the economy is out, and the U.S. is getting pretty good marks. According to the Commerce Department, GDP grew by 2.8% in the second quarter this year. ABC News business reporter Alexis Christoforous has more on what that means. So, Alexis, 2.8, it's good growth, but it's not off the chart. So what does this tell you about the economy right now?
Oh, you're right. It's not off the charts, but when you consider where we've come from, it is really pretty incredible and robust. This is really a snapshot of the health of the economy 2 years after the Fed started raising interest rates to slow the economy and bring inflation down. And we saw that consumers, once again, driving this economic growth. They spent on goods as well as services, business investment also helping out here as companies spent more on equipment. But it's important to remember many Americans still very unhappy that prices for things like groceries, cars, homes are still so much higher than they were just a few years ago because it's been very difficult to get inflation down in those areas.
So what does this mean for the prospect of cutting interest rates?
Right, it always comes down to that.
I know. I hate asking that every single time, but I know it's what's on people's minds.
Look, this isn't really a backward-looking number as strong as the 2.8% growth is, and there are signs that things are starting to weaken. The job market is not red hot as it used to be. Hiring has slowed quite a bit. We're still hurting from higher borrowing costs. This week we found out new home prices are now at a new record high, so locking out even more potential home buyers. And a number of companies, big-name companies, coming out and saying consumers seem tapped out. They're warning about earnings this week, PepsiCo, UPS, American Airlines among them. So I don't think this report changes the equation for the Federal Reserve. We're still expecting the Fed to hand us their first interest rate cut in years at their September meeting.
All right, Alexis Christoforous, thank you.